Right. Welcome to a new daily recap. It's gonna be a quick one, real quick one, because I got some other stuff to do and I'm half asleep. So falling half asleep. So yeah, quick one. GU, EU, DXY, what happened today? Where did we react from? We get this area marked out on DXY, and that's where he tapped in. And actually, this is where we get the move from. And I was initially looking for cells from up here, as I said. Then we got that continuation. If we go lower, we can see that we have better structure being formed. But then we had Asia high being formed. I was waiting for price to come up above Asia high at least to give me an entry. Maybe a bit on the conservative side. As we looked on Forex.com and we saw that we already broke to the downside here, so we could have just looked for a continuation trade. But as you know, I don't like continuation trade. I only like confirmation trades. And you can actually see that. Just mark it out on this one. We took liquidity, then we get the move to the downside. So actually this was the bearish break. And this is where we broke. Not this one. This was only on FXCM. Then here we got another break. So high, a low, lower high, a lower low, bullish break. Liquidity grab, bullish break, continuation down. And we can see we're building up internal range liquidity over here. Oh, hold up. So you can see that we're building up internal range liquidity. And we took that. Now you could class this as your early sellers. Why? Because of the impulsive move to the downside, but not really that bearish break we were looking for. So just liquidity. And actually, if you just follow the structure, and you could say that this is your PY and this is your confirmation. So this break is your confirmation. Then your first trade comes from this area. And if you do continuation trades, then your trade will come from, show you on the time frame again. So here we take out this high. That's our sweep. And then we get the supply zone, aka the buy the sell move. Sorry, wrong one. From here. Like this. And then this is your entry if you take continuation trades. So 88, 78. Perfect, just above that liquidity. And you actually get the entry. 3.5, 4.4 pips stop. So 1 to 3 already gets hit, breaking this low, but as we knew that we reached premium of this bearish leg, we hit bearish structure 4-way. The first target is a 1 to 4, and second target is here. And the third target for this trade is then 50% of this bullish leg. That's that. That's EU. That was EU during London, Frankfurt and London. Then if we look at sorry, New York session. So let's put this to the side. We can see that we tap into this new supply zone. Don't reach the 50% yet, but we can see that we got a nice 5-minute break. To the downside. And if you trade New York, well, oops, this could be a potential sell entry. So this is where you can decide if you take the 1 or the 5-minute supply zone. or you take your 1 minute from this one. I would take this one personally. It's large enough. Over here, we can see we have early sellers. Early inducing sellers into the market by breaking below this low, while actually respecting this leg. And then we can see up movement, and you can actually take this one as your break. Although it's a bit tricky, I'll wait for this one. But if you take this one as your break, you actually get the entry quite early. 5, 7, 4, 7. Stops above here. 5-pip stop loss. And if you do 1 to 2s, then this is your trade. Other than that, you'll get your will be a reduced stop loss maybe. But I would wait for this break and then go for an entry. Sorry, this is a slow way, but it doesn't matter. And then this will be my entry. And actually seeing this liquidity, it is tricky to do. Well, if you want to optimize your entry in a manual way, then you could try to enter from above this liquidity or on that liquidity line on the fair value gap. And again, targeting the lows. That's it. That was London and New York on EU. Sorry for my nose, it's annoying. Of course, we're gonna do pre-market analysis when we had Asia, but for now, I'm looking to come above here and then look for sells. Nice strong PY or supply zone. Now let's add the 50% to it. Over here. This. There we go. Can move this. And this is our 50-minute supply zone. And ideally, tomorrow, I want to see price come above this liquidity. Even better if it comes into the 50% and then give us that turnaround and continue further down. GU. Oh, hold up. You can see also that we're building up this. Oops. Building up this trend line here. So that's nice confluence to continue lower tomorrow. Now for GU, I have no idea what happened today. Can immediately see that this was the last low that led to this high. And we stayed inside that. So if you look at EU, this was the last low that led to this high, and this low led to that high, then we get the bearish break, so much cleaner. Now GU high time frame wise, we're looking at this area above. It's quite far away. But we now get the turnaround as we broke below here. Not very aggressive, not very impulsive, so this might just be a trick. You can see that it's in the middle of nowhere. If you just look at it, there's no price action. We literally just this, and then this is the last leg. Bit of a tricky, yeah. But let's go lower again. So you can clearly see that we were forming a bear structure after we broke below here. Unfortunately, that was not during London. Now, if we go to forex.com, can we see what's different there? Nope, same story. This one was there as well. Well, essentially, we can see that liquidity grab during Asia. Over here. Same as on EU, and then we bear structure. So again, if you like to trade it like this, and this is actually quite valid because let's see, what do we do? We had already reached into that discount pricing, but you could say that, all right, we have reached into the discount pricing, but we haven't yet taken in liquidity. So we might come further down, and with that idea, you can look for continuation trades short. Then this is your 50-minute demand that swept the supply that swept the liquidity, internal range liquidity over here. That being taken out and giving us those inducement early sellers, decent sellers into the market. That being taken, and then if you go to the 1 minute, we can see that price gives us the nice bearish break. And now breaking it down looks very clean actually. Like this. And then one thing though, you gotta take this entire, I wouldn't take this one, I just would like use this one. Oh, sorry. And actually now look at it, it's decent. You can see that if this value gap from this candle, I'm not sure because it's not the third candle, it's the fourth candle, but yeah, it is what it is. We actually come into the fair value gap. So you could choose to either enter from here, or enter from the fair value gap. Now you also have this lag downside, so I would say enter from the normal entry area. Why? Because this is already above premium pricing, above that 50%. So either from here or you take from here. There's 031993. Large stop though. It's quite a large stop loss. 11.7. Now if you get a 1 to 3 out of this, I would be happy already. You actually get a 1 to 4. Huh. Yep. So first TP would of course be here and break even as we come around this area. Over here you already use stop loss below. Where is it? Below this one. We reduce our stop to here. And then coming further down, we go break even after we break bearish again below here. You can actually see we come above. Then New York open. And with bank holiday, that was why New York was that slow. Same story here. Although it looks like we had some moves compared to London, it's just look at open here. And then 3 hours later, it's still in the same place. Now it's down. So it's currently inside this range. Inside that range. So for GU, this would be your trade. Now, continuation wise, you could have also, so this is your internal structure. I'm just gonna make it a little bit messy, my bad, like that. And you could look for, there are actually a lot of areas. So we got that fair value gap, continuation trades here, continuation trades here. And we got this one. So it's just following that order flow. Well, not really my entry drill, so nothing there for me. That's outside of my session anyway. So yeah, that's it. That's basically it for today. Not much. We can look at the candle formations in the high time frame, of course. I forgot about that. I always forget about it. And that's actually nice for this trade. You can see that this candle on the 50-minute over here comes above, leaves that wick. After coming above, closes down here. Now it's not followed up by strong bearish momentum, but this gives an indication of a potential liquidity gap and turnaround, especially following that kind of structure. Now for the EU trade, which was over here, bit of the same story, not quite. You can see this candle was again not that strong bearish momentum. That was only after London closed, so yeah. DXY wise, we just slowly continue up. DXY is more for high time frame. We're still looking to come up here. So actually, I'm gonna just quickly mark it out like this or above here. Those are the two areas, and that's at the same time where we're gonna look for buys on EU and GU. So it will be here, these areas. GU is a bit more clean here, maybe here, but especially here. And then we also reach discount for the red range, so that's very nice. GU, it's a bit of conflicting right now. Actually, with the blue range, and we want to reach higher, so that's all right, because we already reached that discount on this range. So yeah, that's it for the daily recap. See you guys tomorrow. We may usually do more. Hold up. Still got my note here. So structure ranges, bias, liquidity, bias, high time frame candle, wicks, price behavior. So we can actually look at the daily. No, it's a slow Monday. GU thinks a bit bigger. Same. And DXY as well. Short candle, not much. Fake ranges. Yeah, this one might be a fake range if we continue up from here. But we'll see. Because now, for now, we reach into the premium and we're looking for low pricing. But if we, for the rest of the week, oh, fuck, you can't see it. Hold up. Sorry. So as you can see, DXY, low candle, small candle, GU, small candle on the daily, and EU as well. For the rest of the week, with the news coming up on Wednesday, Thursday, Friday, momentum might step in and we might actually just take out all this bullshit just in one go. Could be, or we continue further down, which is now the major play for me based on the new structure. Meaning higher pricing on both EU and GU. And here I have some notes. Why did price move? Why did price move from A to B? What can we see? I think we went over that on GU quite clearly, following the order flow and the same story on EU. Took liquidity take and moved to the downside. Took internal range liquidity take and moved to the downside. Now building up that internal range liquidity. So hopefully tomorrow liquidity taken, entry over here, and then we get the continuation downside. So for tomorrow, we might not look for previous daily highs, just for an Asia high, or actually above here, and then look for continuation following the Asian trend, Asian session. So respecting Asian session here. Might look for a trade that respects Asian session range instead of taking the highs. Taking Asia high would it be in this case. So yeah, that's it. That's the recap. Now I'm done. Peace out. Catch you guys tomorrow on the pre-market analysis. If I will be trading tomorrow, I don't know yet. Got other stuff going on still. Trading for me is now on the side. Working on some other stuff which I like very much as well. So we'll see. All right. Catch you later.